Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Carl and John Zeidler, who's with Wall Street Financial Group. Carl and John, welcome to the program.
Thank you. Yeah, thanks, Mike. How are you doing?
Doing really good. Hey, I'm excited to talk about financial topics with you because as with many things, there are so many approaches and so many ways that families should be approaching their retirement. So before we get into some of your strategies, give us a little background on the Wall Street Financial Group. What was your entrepreneurial journey?
Well, I founded Wall Street Financial Group in 1988. As a registered investment advisor because I wanted my clients to always know that I was on the same side of the table that they're on. So we take the fiduciary standard very seriously here and try to always put our clients' interests ahead of our own.
Yeah, and I came on board, obviously, in 1988. That was before I was born. But I always grew up knowing that I wanted to follow my father's footsteps. I could always tell that he loved what he did. He loved what he did, and he was passionate about what he did. So in 2017, actually, when I was finishing my bachelor's degree, is when I started working here. And at that point, I was just doing basic office stuff, but I was finishing a degree in accounting and went on to finish a master's degree in accounting and to become a CPA as well. And so now, you know, when Dad if he ever decides to retire, I can step into his role.
Yeah, that's a really great combo and I don't know how many, how unique that is in the industry, but to have the financial planning as well as the tax and the CPA and the numbers along with it. So it's almost like one side of the agency is talking about the strategies. The other side is making sure the strategies make sense for families and business owners. Is that what you guys have found?
Yeah, so we really try to take a holistic perspective, and, tax is obviously a huge part of that. I always try to explain, the importance of an after-tax return. You might get a return of 9% on one investment and 7% on the other investment, but if the 9% is getting taxed way more than the 7%, then the 7% really might be in your best interest. So it's all about after-tax returns, and that's really something that we focus on a lot.
Well, it's really I love that you said it that way because it reminds me of when you talk about, business growth, or you hear Shark Tank episodes saying, what were your revenues? And they say, whatever, $1 million. And, oh, that sounds wonderful. But in reality, it doesn't really matter the top line number. It matters what was the profit, how much in expenses did you have? So that's a really, really good approach. Do you guys, I know that you focus on Social Security, and that's such a huge piece of the retirement puzzle because it is something that I feel, in my uneducated opinion, that is so many question marks out there. So talk a little bit about how you begin the conversation with your clients on when they should be considering Social Security, and then what's some of the first steps they should do to maximize Social Security income.
Yeah, part of that holistic approach is to look at all the client's assets, all the various assets that they have, and what's the tax treatment of those assets, because, of course, the best thing to do with Social Security is delay taking it as long as possible unless the client has seriously adverse health conditions. And even in the presence of adverse health conditions, if they have a spouse, going at least to full retirement age so the spousal survivor's benefits are maxed out could even still be important, even if the client themselves are not in particularly good health and don't expect to live very long. They want to make sure that their spouse should be in a good position as well with Social Security. So it's a huge decision at retirement when to take it.
Yeah, and we actually have specialized software here at Wall Street that I know many advisors don't pay for or don't want to deal with. But we literally have a software that's dedicated just to maximizing Social Security, and the biggest piece of that puzzle is your life expectancy. And so it's really taking a look at your health conditions and how long your parents lived and all that is really important in making that decision. And if you have a spouse, or even actually I just had a client with a disabled son whose disability benefits was going to be based on his Social Security retirement benefits, taking all those things into consideration. And most people just think, take it as soon as you possibly can.
Yeah.
When in reality, you really need to take a closer look at that, because, it can't be changed.
That's a really good point about software, but also I want to integrate in with what you said about the disabled son, because I feel like there are going to be aspects that the software will not know about that only the representative like Carlin John will know because of the relationship that you have with the client. So situations and questions to ask to put into the software. And I was born in '67, so I'm old enough to remember the garbage in, garbage out, acronym, and a software is only as good, the output is only as good as what you put into it. So talk a little bit about the way you approach working with your clients to make sure that you know everything there is to know about them to benefit them financially. So when you bring in things like this software, that really then becomes that much more impactful and helpful for them.
Yeah, that's actually a really good point. In fact, the software that we have, in fact, no Social Security software that I know of can really take into account, the whole disabled issue. Most of it is built around couples and around individuals, and that was actually something that we had to sit down and do our own spreadsheets over to see what made the most sense. So, again, that's just another testament to why it really matters about having an actual professional who knows how to do these calculations if they need to do them by hand. But it actually starts off with just doing retirement planning in general. Before we ever have a conversation about investments, we want to make sure that, potential clients are going to reach their retirement goals. And so we have, I always tell people it's a lot of work for us, but it's also a lot of work for the potential client or current client as well, because they have to provide a lot of information to us to make sure that we are making the right recommendations. And to make proper recommendations that are in your best interest, we really have to learn everything about you, what you own, what you make, what your family is, what your goals are. And that's really what it comes down to, is that you need to be comfortable with the advisor that you're working with, so that you can disclose all that information and know that, they're not just trying to take advantage of you or get the most out of you or whatever it is.
Yeah, that's a really good point. And it really just gets down to relationship. And, when it's just fill out this form and get back to us, no, it's about we care and we want to know for the purpose of helping you get the most. So let's dive into one of the points that you made there, guys, is when you should claim Social Security. And I'm certain that you would say that it varies, but give us some ideas on what some of those variables would be when you think about, should you claim early? And, because I know that at age 52, you can't claim yet, but there's a certain age where, okay, now you could claim. Is it in the best interest, even though it's early?
Right. So I always say, if you're a single individual, the answer is pretty simple. Just comes down to, your life expectancy and your health conditions. If you have a lot of health issues, a great example, we had a client that was in some pretty advanced stages of cancer, and he had just turned 62, and obviously that was a no-go to tell him, go ahead and claim at 62 and get as much as you possibly can. But if you're in a picture of health, and your parents have lived for a long time, we had a client who just had applied for a life insurance policy, and he got super preferred, the best possible rate you could get. And we told him, there's no reason that you should claim any time early. You need to postpone as long as you can. Let's wait until age 70 to really maximize those benefits, because each year that you delay, those benefits are going to increase by a substantial amount. If you're a couple, the conversation gets a little bit more complicated. It depends on if your spouse had made less than you, their benefits are significantly less. If they're less than half of your benefit, then really we're looking at trying to maximize that spousal benefit, which is half of your benefit. So there's just a lot of different variables that go into it. Generally, if that's the case, if you have one low-earning spouse and one higher-earning spouse, then getting that higher-earning spouse to wait until at least full retirement age is the way to go. But again, a lot of variables there, and that's why we really want to examine it more closely.
And of course, if the client wants to continue to work after age 62, that's a real no-no in terms of taking Social Security, because they're going to lose most of those benefits are going to be recaptured. So if they're really going to retire and they really are in poor health and they want to take it at 62, there are legitimate circumstances under which that's appropriate. But it's always a good idea to delay as long as is humanly possible, and oftentimes tapping other resources so that you can delay Social Security makes a lot of sense.
Yeah, and you'd mentioned the health aspect, which is obviously a big factor. But then I would suspect that another factor is, does a couple or an individual have the financial resources to delay and still live? So if they're not going to work somewhere and they're in okay health, fine health, and they want to delay, but they don't have the resources from other investments to fall back on. So that kind of gets back to, you should be looking at retirement well ahead so that you can make these moves, whatever those moves might be, and then that way it gives you the most option possible. Now, again, if there's a health factor, then that's aside from this. But the time to make a financial move was 10 or 15 years ago, not today, in many cases. So talk a little bit about that preparation so that you can make good Social Security claiming decisions.
Right. Yeah. I mean, I think that goes for every, retirement decision. Unfortunately, we see a lot of people that just have waited way too long in life to really get started saving, or to, see how, or re-examine how much they should be saving, or whatever it is. And that's unfortunate. A lot of times, when I do my retirement analyses, my favorite thing is to show the client that, yeah, you can retire and you're going to be just fine. But unfortunately, that's not always the case. And if you don't have the financial resources to delay taking Social Security, then chances are, you're probably going to want to continue working, unless obviously you have some health condition that is making you unable to do so. But the sooner you can prepare, the sooner you can start looking at those, all those different factors and what your goals are, the better. So I just stress, if you're listening to this and you're on the fence of, if you think you need to re-examine your retirement plan, or need to re-examine how much you're saving, or whatever it is, get in touch with us, or really any other financial professional that's a fiduciary that can really look at that situation closer. We do a lot of our retirement planning for free, and hope that maybe you decide to move your retirement funds to us to manage for you. Other advisors might charge a fee for it, and so that's a conversation that you want to have, obviously. But if it's free, why not? Why not take that step? Why not do it?
And oftentimes the best advice to a client is to delay retirement. If you want to max out Social Security, your best objective would be to try to go to full retirement age at a minimum. And so maybe rather than retiring at 62, 63, 64, 65, go work all the way up until full retirement. And at that point, then make a decision. Do I want to take it now at my full retirement age, or can I delay till age 70 by accessing money that I have in other accounts?
Yeah. And the way to know that is have someone show you these if this then that kind of comparisons from maybe the software you talked about, and that might help make that decision. There's another aspect that I know I've heard of, so I want you to talk a little bit more in depth about, which is the concept of, well, I'll just make a decision now, and then if it changes down the road, I'll just swap it back out and we'll just tick the next box. But with Social Security, you don't have that luxury, right?
Right. It's an irrevocable decision once you elect to take benefits, yes.
So you better, it's kind of like when you're playing chess and you make a move and you keep your finger on it. You would look all around to make sure, is that the right move? And then, okay, now I'm going to take my finger off. That's my move. Well, you need to make sure that software or that relationship with your financial advisor has yielded the right decision for you to take claim now or later or partial or spousal, all of those factors, and I'm sure there's dozens of others that we cannot even get into on this conversation, but I think that's a big thing that people must realize is too many times in our society today, it's, give me this right now, and then we could just make it go away. We'll just change it. But with this, it's irrevocable. So that's a really big factor. So thank you for clarifying that. And it kind of makes me think of something else too, which is this. If there's a problem we all face with whatever it is, my sprinkler system isn't working, let me just go Google it. You can find so many wonderful things on Google or YouTube and solve a problem really quickly. But what would you advise people that, there's some basic information you could find online, but wow, be very careful getting your Social Security claiming advice online?
Yeah. It's the same thing with taxes or any financial thing. Or looking at stocks, we have a lot of clients who will look at stock recommendations online, and you have to be so careful with what you see online, because ultimately, at the end of the day, anyone can put anything online. You really want to examine who wrote the article, what their credentials are, are they worthy of taking that knowledge from, and having us is really gives you a backup where if you do read something online, you think it's interesting or whatever it is, you can bring it into us and we can examine that closer for you. We do that all the time. It's not just Social Security, it's with taxes, and it's with stocks and everything. Just be extremely wary. I know a lot of people, especially, in the baby boomer generation, I see it all the time where they see something on the internet and they just take it for face value and think because it's on the internet it's true, just like if it was a published book or something. Well, that is not the case at all. You really need to examine your sources, and unfortunately with Social Security there are so many different aspects to it where there's not going to be one article that you're going to read and say, okay, this is what I should do. You really want to examine all factors.
Yeah, and another aspect of maximizing Social Security income is you want to earn as much as you can for as long as you can, and that's going to have a huge impact on how much Social Security you receive.
Yeah, that's a really good point there, Carl. Talk a little bit more about that, because I think that there could be even some variables within that approach, right?
Yes. Mm-hmm.
Yeah, so we really want to, it's all about maximizing the present value of your Social Security benefits. What I mean by present value, if you took all those cash flows that you received, all those Social Security payments, and we actually figured out how much that's worth in today's dollars, if we wanted to buy that stream of payments, how much would we have to pay to guarantee those stream of payments for the rest of our lives? That is what we're talking about maximizing. So a lot of times when we're talking about, delaying until age 70, when we run that software analysis, we're talking about, sometimes tens of thousands of dollars to hundreds of thousands of dollars. So, how much would your retirement be impacted if you had another $100,000? And that's really what we're talking about when we're talking about maximizing Social Security.
And I would even say underneath the word impact and maximize would be the fact of compounding, because when you can run those numbers and realize that you could have X number of dollars by this age, you do have that compounding effect, because most probably there's an aspect of, well, you're not going to use all of the growth from that particular year. Maybe you're going to let some of that stay in there. And again, that gets down to having the right advisor to know your situation and to give you those scenarios, because it's not just a templated cookie cutter solution. I also know that Social Security Administration themselves, they've got a wonderful website, and you can get some basic information there, but kind of makes you think too along the same lines of Google or just online information. Yes, the Social Security Administration has some articles you can kind of get up to speed on some terms and some basics, but they will never have the ability to know exactly the best decision for you, right?
Right. And it's just like the IRS. If you call the IRS about one issue and you call 5 different times, you're going to get 5 different answers. A lot of times we do have a lot of clients that go to the Social Security, the office or whatever it is and get some good information. And don't get me wrong, they do have, good people working there, and a lot of times they do give good information. But it's also nice to have someone on your side that can review that and make sure that the information they're giving you is the best and is the right thing for you. And we do that all the time. It's good to have multiple people on your side.
Yeah, on occasion, I've actually gone to the Social Security Administration office with the client because I'm going to ask them questions that they're not going to think to ask the Social Security employee. What about this? What if we did this? What would this look like? And that can be invaluable too, just knowing the right questions to ask.
Yeah, that's a great point there, Carl, because, again, I forget what it's called, but there's a thing out there where, and you'll recognize the statement, but you don't know what you don't know. And if one of your clients they don't know to ask that question, it might be, life-changing information. It might be that piece of knowledge about that disabled son that could change everything for the outcome, or the spouse that, whatever the case is. So I just think that, it's so invaluable to have someone that does care about your outcome and to be watching out for you. And so that's a huge point.
Yes.
So let's wrap up with this. I think that this is another question that some people may have, which is, I just go to my guy that does my whatever, right? Just a generic financial professional. Talk a little bit about the difference between someone that has a broad knowledge of your financial, maybe some, investment decisions versus someone that really has a deep dive knowledge into how Social Security should work to maximize it and make sure that your retirement is the best that it can be.
Right. Well, unfortunately, in our industry, almost anyone can call themselves a financial advisor. The term financial advisor has basically no, legal meaning at all. And so there are guys who, are just insurance salesmen that call themselves financial advisors. Just like reading something on, like an article online, you want to look at the source where that information is coming from and what their credentials are. What's their degree? What other credentials do they have? Both Dad and I have worked very hard to make sure that we know not only about Social Security, but so many other topics when it comes to retirement planning and such. Like I said, I'm a CPA. My dad's a CFP, a certified financial planner. We both have master's degrees. I have one in accounting. His is in financial services. So when you're working with anyone, too often we see people just going to their family friend, and unfortunately a lot of times that family friend is in a capacity where they're not acting as a fiduciary or someone who's acting in your best interest. A lot of times that family friend I see it a lot, is a broker who is just, selling mutual funds and making commissions. Not that there's anything wrong with that, more power to them. But we offer more, specialized and more advanced approach to retirement planning. We're acting in your best interest. We're acting as a fiduciary. We're not making commissions off of just selling mutual funds. So that's incredibly important, when talking about Social Security or any other retirement topic.
One of the ways our listeners can get much more familiar with what we do is by going to our website. It's WALLSTfinancialgroup.com. And there's quite a bit of information there. You can learn more about John and myself and the types of services that we offer.
Excellent. Guys, I really appreciate you coming on today because you made some really great points. And that last one, John, you made was so powerful, which is you don't have an ulterior motive in making one recommendation over another. And being a fiduciary is a requirement. You are forced to make sure that you are giving, objective advice. And I think that's a big piece. And when you said that you can, you work for free, it really is that's the case. So when you can give advice to someone, you can almost give like a medical second opinion. Let's take a look at your situation, see if we can maximize something. I think those are all wonderful, wonderful points, and definitely the website here I'll make sure is in the show notes, as well as the website wallstreetfinancialgroup.com, wallstfinancialgroup.com. And Carl and John, I just really appreciate you coming on today. It was a pleasure talking with you.
Oh, thank you.
Yeah, thanks so much, Mike. Great talking to you too as well.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.